time came when the ticker tape in the broker's office told a new story. It was panic. 16.5 million shares of stock sold in a single day.
Ladies and gentlemen, welcome back to Stock Dirty to Me, the number one podcast for investors from the podcast, the Facebook group, Stock Market for
My
Beginners.
sound's messed up, Ian. I'll have to exit out.
Tony's going to be right back. But on my course, Phil Better, the podcast mogul, with me, as always, is Dalton, our advisor from Battencourt Capital. Dalton, how are you doing today?
Great day, man. Great day. Well, I was enjoying the day. My portfolio was up 3% today, which is amazing. And then Facebook reported earnings, and I lost 20% in Facebook. So it looks like I'll be buying more tomorrow. But yeah, it was going good during the day, and then after hours, it kind of got hit there.
Yeah. But that's also you never know what can bring tomorrow, and tomorrow is just going to mean a better day for you because you can get the dollar average down there and cost down there. So you got that, and then Tony, can you hear us? Are you back, Tony?
Yeah, goddamn Apple AirPods.
This is why I tell you to get plug-in. I get a plug-in headset.
Hey, if you want to get the Google Pixel Buds, I think those would be good for you.
I do have the plug-in ones, but I just like the freedom of not having a wire. So
I understand, but if we keep having this issue, maybe it could solve you some problems. It's only for an hour long here, and then you're back to being, uncluffed by the connections of life here. I want to shout out to Dorothy for being in here from the Village in Florida. Thank you so much, and of course our good friend. This is Mark Overys, tuning in from the back end or backyard of Tony's place. Make sure you send him some beers after the show because it's always nice to see him. And then
it's warm out today. Yeah,
it's nice. It was a beautiful day. Yeah, and then we got B. Roos Leroy in the house saying he's out from PA. So thank you so much for tuning in, everybody. And if you want to shout out or have any questions, you know what to do. #live. And if you're watching in the replay, #replay. But if you have questions, we'll be more than happy to answer. Tonight's agenda, I'm going to lay it down on it for you guys, and then we're going to just jump straight into it. We're going to talk Google, which is, going big. There's the stock split that's coming or already has happened. I know Dalton's been talking about that coming in. He's very excited to talk about that. We're going to talk about if this market can rally or is it doomed to fail. And then finally, we're going to close off with what's going on with Facebook and their earnings because like Dalton said, he's down 20% just there. And then if we have some time, we're going to talk about some stocks for you guys. So if you have any stocks you want us to talk about, we're going to call that out near the end. So not yet, but at the end, we'll do a live analyzation, what we think of that. So I want to thank you all here. And we got Bob jumping here. Good evening. And it's been a minute. Yes. So I'm glad you're back, Ben. So thank you very much.
Welcome back. Yeah.
Bob there. And then we got Woohoo Dalt on Google. Dalt called it. Dalt did call it. And Mark is giving you props for that. So yes. So Dalt, let's talk about the giant elephant in the room that is Google. What's going on there? Tell us. Let's go.
So yeah, it was another great quarter. Google just continues to do what they do best, which is make money and advertise in capitalism. Record numbers in 2020 during the pandemic, record numbers in 2021. Doesn't really matter. Record numbers in 2019. It's probably gonna be record numbers this year too. They just keep on. All they do is advertise, so they don't have a lot of risk. We live in capitalism, so everybody has to sell you on something, and they just collect advertising payments.
They're the middleman.
Yeah, you really saw their prowess in the advertising market with that last quarter, which I think was $75 billion worth of revenue. So absolutely killed it. I honestly think that revenue and earnings were higher than Microsoft's. So with that being said, now that I'm very bullish on Google, now that the price has dropped significantly, or not dropped yet, but it will in July in a 20-to-1 stock split, I could see Google making a run at the most valuable company in the world, because Microsoft already stole that number one spot for a few weeks from Apple, but their earnings and revenue is way less than Google's now. So I think you'll see Google take a serious run, because a lot of people can't buy at 2,900. Let's be honest. I mean, I'm in Canada. I trade with Questrade. We don't have fractional shares. TD Ameritrade manages $1 trillion in assets. They don't have fractional shares. So all these people,
Vanguard,
yeah,
there's a lot of major brokers in the U.S. that the only major broker in the U.S. that allows fractional shares on everything is Fidelity. That's it.
Yeah. So they're gonna. I feel when these shares hit 200 or less, I think you'll see a lot of these. A lot of people come in and buy, and you'll see a huge rally in these shares. And like, again, it was 75 billion and profit margin was about 35%. So they're very strong, even in the wake of the Omicron variant. They've been very, very strong. They've been consistent, and like I always say, it's a company that we all use every day. It's a no-brainer.
$145 a share, or as of right now, if it was to split right now.
Exactly.
That's very affordable for the beginning investor or average investor. So
this could technically be the modern day Berkshire Hathaway.
I am definitely going to be converting all of my crypto to Google when it splits, because I think I'm out on crypto.
You're out.
I don't know. I keep going back and forth. Is it a Ponzi scheme, or is this going to be the greatest thing ever? I don't know. I really, and that scares me, and I want to put my money into something that I believe in. So
if you're losing sleep, definitely a good.
Yeah, I'm not losing sleep, but I don't have a significant enough in Bitcoin for it to really matter anyways. Like it would need to go up to like $2 million a coin for me to really get anything of high value out of it. You know what I'm saying? So whereas Google, I feel comfortable it's one of those things where we all use Google, and if Google vanished from our lives, we would kind of be screwed for a while.
Well, yeah,
they
if you look at
run
it,
the internet.
Google went down, and nearly 90%, like a large portion of the internet was down, and we had no access to it. Like, look at that.
Bitcoin, if Bitcoin vanishes, it's not going to affect my life at all. So I'm thinking I need to allocate the money to things that actually affect my life. So
yeah, Dorothy's over here agreeing with you as well.
I could be wrong, but I feel better with my money in Google than in Bitcoin. So we'll see. Time will tell.
And I mean, remember when Google broke above 3,000 last year, and then it traveled down early in January to like 2620 or something like that. It was more than a 10% pullback from all-time highs. And then earnings came out, and it was I think everybody realized, well, Google is still Google. And even the quarter-over-quarter revenue growth from 65 to 75 billion was absolutely steaming. So I think it really hit at home that Google is still able to advertise and pull a lot of money in this market. So I think that really bode well for investors.
I think the other thing is, like you said many times, and we've all said, this isn't going to fundamentally change anything about the company, and it's not going to change anything. The market cap is going to be exactly the same. Yeah. Just because they're splitting, giving you 20 shares, it doesn't add any value to anything. You still have the same amount of value.
Correct.
But the big thing it does is it makes it feel obtainable for people. It's a lot of people don't like, even though you can buy fractional shares, people don't want to have 0.1 share of Google. They like to have, people like round numbers. People like seeing that 1 share, 2 shares, 3 shares. So, and I admit I'm the same way. Like I wouldn't a dollar cost average into Google, because to me it's just like, I'm just going to dollar cost average into my ETFs. But at $130 a share, now I could buy 10 shares of Google, and it's not that big of a deal. Or I could buy a share and it doesn't matter at all. And I think the average person can do that now. So it's just more of a sentimental thing. And I think it is going to make a difference.
And Bob's over here saying people love having a
Yeah.
ton of whole shares. And it's true.
Yeah.
Like knowing that I can say I have 10 shares of Google and people are like, oh, damn, son.
Yeah.
If you say I have a fractional share of Google, they'll be like,
Yeah, it's like I have a 0.117.
I have
shares of Google. People are
1.5%
like, what?
stocks
Yeah.
of Google. Like, okay,
Yeah.
what does that mean?
Definitely.
I do want to just say before we jump on still with the Google train, because Google is smart money. I believe it's like the Berkshire Hathaway going forward, because it is grabbing so many companies, right? Just like Berkshire Hathaway did. But me and Dalton and myself were on a podcast called Successfully Chaotic, talking about investing, and hosted by a lovely lady named Maria Daniels, who's in the group and I highly suggest you go listen to that. But she mentioned that she wants her shirt that says "Stock Dirty" to me. Now, I'm putting this out into the group.
Good show.
You did. Thank you
show.
very much.
Yeah.
You were unfortunately working. You were supposed to be on it, but work. I'm asking the group here and the people watching, if we created a shirt, a shirt that said "Stock Dirty" to me or something along those lines, would you guys be interested? Let us know in the chat. Just leave it there. We'll probably put up a poll coming up for the rest of the group who aren't watching this and that. But let us know if you would like us to make some merchandise for you guys to support us, and we will take that and we will run ads so that we can boost the show up and get you guys maybe even pay for people to come on the show, special guests and that, because that is a possibility with a service that I'm connected to. So if you guys are interested in getting shirts or stickers or stuff to support us here at the show that we can help make the show better, let me know in the chat. Let us know in the comments. And if you guys are watching this on YouTube or wherever, comments and all that stuff. Okay, going on to Google. That's making people money. Anything else we want to talk about, or do you want to go on the market rally?
No, I'll add a couple other things here. So as everybody knows, Google is the largest company in my portfolio. So I'm very, very high on it. I'm always saying that it's always a good time to buy Google. I find that a lot of stocks that people are recommending in the group are mentioning, and then people ask about those stocks that other people mention, and that person says, oh, well, why don't you just wait for a dip before you buy, right? So again, Google is not something that you really need to wait for a dip. And I think if you have to wait for a dip, I think that's something that you shouldn't be buying anyway. But Google is just something that you can always buy and you can always count on, because to be honest, I've never seen Google expensive. I've never seen Google trading at 50, 60, 70 times earnings. It always trades below 30 times earnings. Even now, it's still below 30 times earnings on that huge jump. So like I said, these things tend to be really cheap, even though the amount of money and the earnings growth that they have. So again, this is just something that you really want to tune into. And where Google plans on getting their next leg of growth. So they're the dominant player in advertising. They're number one. Facebook is two. But where they feel that they're going to get their next jump in revenue is from cloud services. They're the number 3 cloud services provider behind Amazon, AWS, and Microsoft Azure. So they're number 3, and their Google Cloud revenue jumped 45% year over year on the last earnings report. So they still got that solid double-digit growth in Google Cloud, and they're making a push for cloud computing. So that's where I think that next leg up will come from. So again, cloud is huge. It's something really good to be in. And Google search, let's be honest, if there's ever a time in my lifetime when I'm not using Google search, I'll probably be fucking lost. So again, it's just if I don't have maps, how am I gonna get around, right? So
yeah, the cat's kind of
Apple Maps is crap. Oh my god.
It's just stuff that we need in order to organize the internet and access the internet. That's all I have.
Yeah. I mean, the way I look at stocks, it's one of those things where if this company was eliminated tomorrow, how would it affect your life? And if it would affect your life, obviously the company has to be profitable and other factors, but it's one of those things, if this company vanished, and would your life change significantly, or would you even notice? And that's kind of where I'm at with this Bitcoin thing right now. Like, if Bitcoin vanishes, it really doesn't matter to me at all. But if Google vanishes, like, it affects everything, my work, my everything about my life.
My whole business is gone.
Everything. It affects everybody. It affects everybody because Google is literally the search engine that runs the internet.
Yeah.
So it's a big deal. It's a big deal. Amongst YouTube and many other things that they own, it's
They
a
support
huge cloud
Netflix.
services.
When Google's
cloud
goes down,
services.
Netflix is down as well.
So that's just one of those things. If you're someone that is fearful when there's drops or there's some market volatility, if you invest in companies like that, then there's really nothing to worry about. It's very unlikely that Google's going out of business anytime soon, guys. And neither is the last topic we're going to talk about later today, Facebook. So, like you said, when is a good time to buy? And people say wait for the dip. Well, you just got your dip on Facebook, which
You
we'll
got a
talk
huge
about later. So, yeah. But sorry, I didn't want to change topics, but I just kind of rolled into that.
It's all right. It's all right. We'll
Sure.
pull it back.
Yeah.
We'll pull it back, and we'll
Bring
go
us back,
into,
Phil.
Yeah, we're going to go into the market rally. What's going on there? Tony or Dalt, who wants to take the head on this one?
You want to lead this one off, Tony?
Yeah, it's actually kind of funny. I was reading that comment, but it's actually kind of funny that the market had the worst January that we've seen since 2008. I believe the January drop in 2008 was a 9% drop. And that's like amongst the market index, S&P, NASDAQ, and all those combined, or the total market index. And I think this month it finished about 4.5% drop, or I could say this month, but now we're in February. So in January, it finished about a 4.5% drop. So all things considered, even though it was the worst drop we've seen since 2008, it's actually been pretty good. We've recovered a lot of those losses in just 4 days. Now, I don't think this is going to be sustainable. I still think we're going to finish this year in the red. And I still think when we get to March, which is when I'm expecting the interest rates to be hiked up by the Fed,
definitely,
I think we'll see a lot more volatility then. And we may actually lose everything we gained this week, which is I think that's pretty likely. I don't think it's anything to be alarmed about. For those of you that watch the show or that are in this group, you kind of knew this was coming, and we've talked about this for a long time. It's the market's crazy right now. Nothing really makes sense. I mean, Facebook, their earnings were less than expected, but they still had $29 billion in revenue and matched last quarter's revenue pretty much. And people are still panicking. And I've seen people putting comments that Facebook's going out of business. This is the end for Facebook. Meanwhile, they're typing these comments on Facebook. So, sometimes you just got to take a step back and pull up the big picture of the year-to-date map. And it's not that bad so far. It's actually better than I thought it's been. And it actually recovered pretty quickly, a lot of those losses. And that's why you just stay in the market, in my opinion, because you never really know what's going to happen. It could rally and completely wipe out all of the losses for the year, or it could kind of just flounder, or we could see more losses. It's kind of unknown, but in my opinion, I think we're probably going to see more losses around March during the next meeting. So,
yeah.
Mark brings up a question here. If I can read it out to you guys. He's like, why not buy the VIX when March comes in? You think the market is going to get crushed by the Fed to hedge?
Because I just don't want to put my money in stuff like that. I feel like I don't really need to hedge. It doesn't really matter to me. I've worked hard to build a pretty good savings, so I don't need any of this money that's in the market. Even if it dropped 20, 30%, I could let it sit for years. It doesn't matter. I'll just keep adding to it. So to me, I'm not panicked about losing anything. If you're somebody that doesn't want to lose any money and you do want to hedge your investments, then I guess you could do that. It's just one of those things, you got to time it correctly. And I just don't want the stress of doing that. That's my opinion. I know people do it successfully and they're pretty good at it. It's just not something that I want to deal with. So that's my take.
He has a follow-up. He's like, same for me, but why not? Why not when you know volatility is coming?
Well, I didn't know that we were going to have a huge 4%. We were going to get 4% gains this week back and everything, break
Exactly.
our losses in half.
Good point.
So the way things were going, I would have thought we were going to keep losing money. So if I bought into the VIX, I would have definitely thought we were going to lose more this week. So I would have, by that logic, I would have bought into the VIX on Monday and I would have lost a lot of money doing that. So it's hard to time those things,
Exactly that. That's a really good point, and I wanted to add that. I'm not like I agree with you 100%. I'm not sold on this market rally at all. But I didn't think that we'd have a market rally this week. Like
no, definitely not.
My portfolio was up huge.
It's been a big rally. It's been
Yeah.
a really big. I've basically recovered all my losses. I think I'm actually in the green this year. I'm pretty sure year to date I'm barely in the green now.
Exactly. So I wasn't expecting us to get this huge rally here. It kind of came out of nowhere. So if you were short the VIX, you just got screwed because it's leveraged, and that just went right back to where it came from. 3 times leverage. We just had a 10% gain in a week. You got toasted. So again, like this is why you need something. It needs to be something bigger, like monetary policy decisions, like rising interest rates. I don't think that's a good enough reason. If they change Fed chairs, I was looking to get out. If they change Fed chairs, that's a really big reason because certain people are more hawkish or dovish than a different person. That would be a real change. I got out in 2020 because I saw what was happening in Italy and Europe, and I knew if that came to North America, we'd get screwed. That was a really big changing event. But rising interest rates, that's not good enough to get me to go short.
Especially at the rates they're talking about. The Fed is not going to do anything substantial. And with them, you never know. They're very scared to announce anything. Anything they say affects the market in a big way.
Exactly.
So, and you could honestly, they should have already increased the interest rates. And I thought they were going to. But now they moved it to March, and when March comes, they may put it off again. They may kick the can down the road again. Who knows? And there's a lot of political nonsense to that too. There's probably some pressure because rising interest rates is going to be, it's going to be bad for the economy.
And it's going to be a talking point
temporarily, but in the long run, it's going to be good. So. You have midterms coming up, and I don't want to get political about anything, but you have midterms coming up, and a lot of the stock market is tied to politics.
Mm-hmm.
People see the stock market as a measure of the economy, so it would be bad for the stock market to be crashing mid-year. So I don't think we're going to see a crash, but I could be wrong, but I don't think we're going to see a crash. I think we'll probably just see lots of volatility up and down like we've been seeing. So.
Yeah, we have, who is this? Give me 1 second. We got Mark going. I'm sure they're going to make sure the economy is good before the midterms. Yeah.
I would think so. It's a bad look for any political party, regardless of what party you're in, to have the stock market crash during midterms if you're the party in charge. So it's not a Republican or a Democrat thing. It's just one of those things.
It's a smart political move.
Yeah. It's a bad
Joe
look.
Biden screwed me again.
Yeah. So
no one wants to be that. We have Amir or Amir. Sorry if I mispronounced your name. So you guys are buying Meta tomorrow? Okay, got it. Which is true. Yeah, we
100%. If I can get it for under $300, if it stays, if it stays at where it's at right now, I think it's at $250.
Yeah, it's at $249.05 on Market Watch. Yeah,
I'm actually, so heads up for those of you that have Fidelity, and we talked a lot about this. Dalt brought this up about having cash in your account, a certain amount of cash allocated in your account. Now, I said in the past that I don't ever do that because my brokerage allows instant deposits, which is how I've always invested. If I wanted to buy something, sometimes I'd put $1,000 in. I do my weekly investments. I usually put about $100 in. So I never had a problem. It's just instant right away. Well, apparently you can't do instant credit on aftermarket hours through Fidelity. So those of you that have Fidelity, I've never bought anything after hours, and this was an opportunity with Facebook. I'm like, wow, this down 20%. I have to buy this right now, and I couldn't do it. So I'm kind of disappointed. So those of you, you should probably listen to what Dalt said previously about keeping cash in your account, which I'll probably keep a small amount, maybe like 1,000 in there or something.
There you go. There you go. Yeah, it's currently sitting at negative 22.89% close currently.
Oh, that's beautiful. I hope it stays.
Yeah, it's
I know there are some ramifications, which we'll talk about. Are we on Facebook now, or what?
Yeah, let's get into it.
Yeah, we'll jump into it. So I'll get it on the screen here for you guys. So this is where it's currently.
Pull up the privacy news story about the iOS 15 update.
All right,
can you pull that up?
With who? What are we with the Apple website?
Just Google Facebook. If you just Google Facebook and type news or click the news tab, it'll come up right away. You know what I'm talking about, Dalt?
I do, yeah. I do. That started in Q3 though, and they handled it pretty well.
Yeah. Which one am I looking at? Because we got the Apple and TikTok.
Essentially, what's happening is Apple is released some update on iOS 15 where they're not gonna. They have a privacy setting.
Yeah, the tracking.
Yeah, so I guess it's going to be harder for Facebook to advertise.
Yeah.
Now, their profit margin is definitely down from their previous quarter. Let's see.
So yeah, this privacy thing is eating into profits a little bit, but it's the same thing for Google too. The only reason why you didn't see Google miss is because Google didn't spend $3 billion on the metaverse in Q4. Facebook did, or sorry, Meta Platforms did. And so I think the privacy settings, I think for guys like Google and Meta, it doesn't really matter. It started in Q3. Both Google and Meta had huge beats. Meta doesn't beat this time around because they sank $3.3 billion into their Reality Labs division. So what's happening now? So they beat revenue. Revenue, I think, was it was 33 billion, so it was record.
Oh my god, I was looking at the wrong. Wow, I was looking.
Yeah,
at the
it was
wrong
record.
quarter.
It was record, and then earnings was 10.3 billion. So again, it's pretty close to 30%. They're used to 35. So I think that's about 27% profit margin. It's still really high, but the street was expecting a lot more because they didn't foresee the losses of how much Zuckerberg spent on their Reality Labs. And for now on, every time you see a Meta earnings report, they're going to track Reality Labs too. And so Meta has 20% of their entire workforce is at Reality Labs. And what Reality Labs is their metaverse arm. So the things that are done at Reality Labs are all AR and VR stuff. So,
oh my god, I feel even better about this now.
Yeah, it had nothing to do with their advertising. Their advertising is fine.
Yeah. Oh, this is great.
So, Reality Labs made
earnings. They had a revenue increase of $4 billion from Q4 of last year.
It's crazy. It's crazy.
That's unbelievable. I actually was looking at the wrong quarter, and I was like, oh, well, they only matched the last quarter, but they actually increased it by $4 billion.
Yeah. So,
I mean, what are we talking about here? Okay, they have a profit margin of only 28% now instead of 33%. Like, it's basically, I'm sure they're going to find ways to make up for it. I'm sure they're going to make up for it somewhere.
It's record spending for them. So they're doing their capital expenditures and they're trying to find another revenue source, and they're trying to do that through Reality Labs. So every quarter this year, you're going to see R&D start going through the roof. So it's not like if they hadn't have spent that 3.3 billion, they would have beat earnings. I just want to make that clear. Had there not have been a Reality Labs, Meta would have beat earnings this time around, but they're trying to build the metaverse.
They're trying to build more revenue. Yeah, another revenue stream.
So it's gonna come out on profit for a little bit, but I think revenue will still continue to be very, very strong. They're just siphoning everything out from Facebook and Instagram ad revenue. They're siphoning profits from that, and they're sinking it into Reality Labs to try and generate more AR, VR, consumer friendly stuff.
In 5 years, they're going to be fucking triple the price.
Exactly, and this is the point I made to a lot of people in the stock market for beginners group, because I always say that Meta platforms or Facebook, they are the creator of the metaverse. Whether you like Zuckerberg or Facebook or not, nobody else is making money on the metaverse right now except for Reality Labs. Reality Labs posted $877 million in Q4. So they're probably making close to $4 billion per year.
This is the smartest. This and Google. If you buy this and then Google and Facebook, and you just continue buying this, in 5 years, you'll be fucking golden. In 10, 20 years, who knows?
Yeah.
By the time you're ready to retire, you'll have $1 million portfolio just by buying them now. Jesus.
Yeah.
And guess what? If they wanted to, they could just, if Reality Labs doesn't work out, they could just cut their losses and then get all that revenue back. And they'll just write it off. So it's funny because you've seen people in the group we are talking with how, no, it's going below 200 tomorrow. I've seen someone saying, it's going to zero. Like, what are we talking about here?
I don't know about zero, but if it goes 200, I'm buying a lot more.
If it goes to 200, I'm going to have to put a significant amount of money in there. And then, because that would probably be a swing trade for me. I'd probably let it go to 400 and then just double my money quick. That's insane. But I mean, this is one of those opportunities. We talk about stashing cash for an opportunity, and this is, I mean, you just got it. Like, what was Facebook's year to date? We pull up their year to date. Yeah.
Year to date.
I mean, I know we're only a month into the year, so, and everything's been kind of down.
So they started the year at 33.
I guess I should say 1 year. They're 1 year. Last 12 months.
The last 12 months. Here we go. 12 months ago, they were at 266.65. And now they're at 249.
Guys, you're getting a 1 year discount right here.
Jesus.
You're getting the price.
You're getting a $20
what it
discount.
was a year ago.
You wait, so it's 26
well,
here, it's 66
technically,
and now
from February 3rd, 2021 to February 2nd, 2022, it's up 20.94%.
Oh,
like
okay.
From February. If you go from January of last year, it's down.
Okay. Yeah, so the exactly 12 months ago, it's still up 22% from exactly 12 months ago. Yeah. So you're still getting a pretty significant discount here. So if you missed out on Facebook last year, now's your opportunity to redeem yourself.
And the same sort of thing happened with Netflix too. And again, Netflix is not anywhere near the quality of company as Meta, but the stock fell 20% after earnings. A billionaire went and brought up $1 billion worth of shares. I think Netflix was trading at 380s. Now it's up to 430. So.
I'm actually kind of nervous that this is going to pop in pre-market and I'm going to miss out on this price.
I hope not.
I'm actually concerned.
I'm only buying when markets open. I've never placed a trade pre or post market.
Well, you could do limit order in pre-market, so you get the price you want, so you're not going to get screwed. That's 100% what I'm going to do. But I'm worried that at 8:00 tomorrow morning, because there's all these apps where you can buy through Webull and all these other brokerages, that they're just going to inflate this price back up over 300, and it's like, damn it! Like, what an opportunity!
Yeah, and
even 300 is still good, but
if it doesn't, a lot of these hedge funds that have a lot of cash sitting around, they will certainly take advantage.
Oh my god!
Definitely. Yeah, they'll certainly take advantage. So,
what do you think is going to happen tomorrow with this?
I think it's going to go up.
I could see it sitting. Netflix sat for like 2 or 3 days before Bill Ackman decided to buy $1 billion. So I think it could sit, and I hope it sits because, as I said, I'm going to buy when markets open. I hope it sits here. but eventually it will go back up. Like again, Zuckerberg is trying really, really hard to find a way to grow this company. It's really hard to grow. Like people don't understand. Like Google has the most users of any service in the world because Google search is used by, I think, over like 3 billion people, over 4 billion.
Mm-hmm.
Facebook has 2.9 billion monthly active users. Once you get to that point, you're pretty saturated. And so Zuckerberg is trying really hard to fund something else that people can use and get more users from and revenue. And he's betting on this Reality Labs and metaverse stuff. So it's going to be some big spending, and we're going to see how it pays off. Like the company does have a revenue. It makes about 877 million per quarter, which is up double digits from Q4 of last year, where Reality Labs only made 717 million. So they managed to raise 170 million in revenue year over year, year over year. So that's something really, really important to watch. It is making money. It's not just a loss pit. So he's going to try really, really hard to build that up. And as Tony said, if it works out, great. And Facebook or Meta, will have its new revenue stream, which is really good because these advertisers, like Google's is the cloud. That's where they're getting their second win from. Facebook or Meta, is going to bet that it's going to come from the metaverse. So that's where they plan to get their second win from. If it works, great. As Tony said, if it doesn't, they shut it down and the profitability goes right back up to 35%. So it's going to be like
one thing to remember. Sorry, go ahead.
No, go ahead. I was done.
I was going to say one thing to remember for those of you that own the index, like S&P or NAT, or most the QQQ really be more affected because this dropped a pretty big amount. You're probably going to see the S&P and NASDAQ or QQQ ETF in the red, I would assume, because that's a pretty big drop. I don't know how much the weighting is in Facebook, but I think it's one of the top 4, right? Top 4 or 5.
I think it's 3%.
Okay, so maybe it's not that significant, but I think Apple is the highest holding. So
yeah.
But 3%, it'll probably affect it quite a bit if it's down 22%.
Yeah.
So we'll see. Don't be alarmed.
Futures for the S&P are already down 1%.
Yeah, expected.
I just want to bring up a point that Mark has, and he's made it once or twice. He goes, as a high school teacher, not one student has Facebook, and I'm being called a boomer for having it. Mark, you have to remember, we as millennials, it's true. The younger generation aren't using it. That's why Mark is going into building the metaverse, because that's going to be the next generation's social media. So Facebook has the money to invest in it. So they're doing
also
that.
Using Instagram, which Facebook owns.
Yeah, Instagram, it owns Instagram. So it's getting that younger generation as well.
I do have a big point on that. I have a big point on that. So great.
And plus, our generation has are the money generation right now. We are the ones who have more money than the younger generation. So we are still paying into that. We're still using it, and we represent that. So, and yeah, students use TikToks, but I know there's a lot of boomers on Facebook, and students use TikTok, but Facebook is bringing things like that as well, that TikTok. So it's not going anywhere with 2.9 billion users, or like over 2 billion users. It's not going anywhere.
You got to think about all the businesses that use Facebook for marketing. We're on Facebook right now,
we're on Facebook. You guys are learning about stock market on Facebook. So if we're using
Facebook is still an amazing platform. It's not going anywhere. It's ingrained in the fabrics of society. It's going to be around for a long time. And TikTok is not like, I know there's social media platforms, but they're not really the same thing. They do completely different things.
Yeah, Facebook.
We can't do what we're doing now from TikTok.
No, TikTok would be competing against. Is it competing against YouTube?
Snapchat.
Snapchat. That's what it is.
Mm-hmm.
Snapchat and TikTok, I consider more competitors than Facebook and TikTok.
Facebook is.
And the other thing is, why
website.
can't you have both? Why can't you have Facebook and TikTok? A lot of people have all of this stuff.
Yes,
people have everything.
Yeah. So
isn't Oculus owned by Facebook too?
Yeah, I think so.
Yeah.
So there's another thing that kids are going to use.
And WhatsApp.
And WhatsApp, yeah.
Oh, WhatsApp is owned by Facebook?
Yeah, WhatsApp isn't really big in the developed world, but among developing countries, it's bigger than Facebook Messenger.
Is it
So
what's
Yeah.
up or WhatsApp?
WhatsApp.
WhatsApp.
It's
Yeah,
yeah,
WhatsApp.
WhatsApp.
Okay.
Yeah.
Yeah.
Yeah, and
So that's
like,
a big one. Yeah.
yeah, because in this, I was watching a news report.
A lot of kids use WhatsApp.
Yeah, and in the developed world, they never started. They didn't have landlines. They went straight to cell phones. So they already have that jump. They're starting to learn. We grew
Cross-country
up with,
communications.
yeah, and that instant communication like that, and because WhatsApp uses you don't really need a cellular
Yeah.
data. You just need Wi-Fi, and those cities are just implementing Wi-Fi across the whole city. So you're constantly connected to the internet, so you don't have to worry about data fees and that. So
I do hear what Mark is saying, though. I know TikTok is very popular amongst kids, and I totally believe that all his students are using it. Absolutely.
you spend I can spend an hour on it without even realizing an hour's passed. Like it is a completely different
I just
form.
don't think it's going to overtake Facebook.
No, Facebook is Facebook is going to be like blog, like everybody can blog, like you are able to make money off Facebook.
TikTok's not even a publicly traded company, is it?
No, it's owned by, I think there was like, wasn't there some issue with Trump and TikTok? Because it's like a Chinese.
We don't even know how profitable TikTok is, do we?
Yeah, they don't make money. No,
and they pay they pay barely anything to their creators. That I know.
Exactly that. I was going to make that point. Exactly that. And they don't pay as much. But the one thing with that is I read in the Wall Street Journal today, I think I posted it on my Insta story, that the Biden administration is now looking into TikTok for U.S. security threats. So people thought it was just Trump that was doing this. No, Biden's doing it too now. So again, they're going to have, TikTok is going to have a really, really rough time. Anything Chinese is going to have a rough time in United States. So it's not going to be it's not going to be as big of a thing as Instagram and Facebook. Just to put this into perspective, WhatsApp has over 1 billion users. Facebook Messenger has over 1 billion users. Instagram has over 1 billion users, and Facebook, the platform, has over 2.9 billion. TikTok only has 800 million. They're not even at 1 billion yet. So if you combine the whole Facebook suite, it's not even close.
Yeah.
It's not even. They're not even.
I
They're not
almost
even
don't
really
even want to. I almost don't even want to talk up Facebook anymore because I want the price to stay down.
Don't buy Facebook.
Don't buy
Stay
Facebook,
away from
guys.
Facebook,
Horrible investment.
And to answer Mark as well, this was one of my sticky notes I had written down. Someone asked it, so I'm going to read it. Meta is investing heavily on Instagram Reels to combat TikTok. So Zuckerberg is aware. That's why, if you notice, when TikTok first became popular, Instagram came out with Reels. And what Reels are 15 to 60 second snippet videos that are very, very similar to what TikTok does, 15 and 60 second videos. When he did that, it was very smart for him to invest in that because he kept people on Instagram. But what happened is he shifted people away from stories and Instagram news feeds over to Reels. So now people use Reels like they do through Instagram, which is flip through videos. Now people just sit on Reel feeds and just flip through Reels. That was a very smart thing for Zuckerberg to do because he kept Instagram alive. The bad side of that is Meta makes less money on Reel ads than feed and story. Mm-hmm. So Instagram, the bulk of Instagram's revenue comes from feed, then story, and then the last most profitable ad venue for Instagram is Reels. So he makes the least amount of money on Reels. So he shifted so many people over to Reels that Instagram took a little bit of a profitability hit there, but he kept the users, which is the most important thing. So Reels did Instagram all kinds of favors. So Zuckerberg is very, very intelligent. This guy's no slouch.
He's an alien.
Yeah, he's literally
a robot, ladies and gentlemen.
He's a robot. He's not
all of these. See, Elon Musk, Zuckerberg, all these people are aliens, man. They're all aliens.
Making the world a little bit better. We're moving on here from the from Facebook, Meta, and all that. Someone did have a very interesting question here for us. I'm just gonna go get the individual's name. Alicia Cowley. I apologize if I
Oh.
destroyed your name. It's do you think after Google splits that Google will get back to 3,000 a share in 5 to 10 years?
No,
That's lofty goal. I don't know about that, but
No.
that's, I would say in 5 years, if it splits to 150, in 5 years it could be 350 a share, 400 a share, maybe.
Yeah, sounds
You got to
like
be realistic. I mean, I know crypto and meme stocks has changed expectations, but we have to get back to reality land at some point. And I would say if you're doubling your money in 5 years, that's really good. You know, to double your money in 5 years, pretty
Maybe in
good.
20 to 30 years it could be closer to that, but
Now,
not.
I would say you're probably going to do better than double your money, but to be safe, I would expect to double your money in 5 years. Is a good expectation. That's
at the very least.
realistic.
At the very
Yeah.
least, for Google, yeah.
That's realistic. Yeah.
Yeah, I agree. Back up to 3,000 in 5-10 years, there's not a chance it's going to happen. You have to figure the valuation of the company for that to be the case. So even though it's going to drop down to $150 a share or somewhere in that realm,
They have to go up 10x.
Exactly. The company's still going to be worth 2 trillion, sorry. And so
yeah, it'd have to be worth 20 trillion for that.
Yeah, it'd be
go
worth
up
more
that
than
much.
the entire planet itself. So
Well, the U.S. stock market right now, I think the total U.S. stock market's worth about 40 trillion. So
There you
it'd be
go.
worth half of the U.S. stock market by itself.
Yeah, it's not going to happen.
Yeah, no, probably
But
not.
Yeah.
you can't expect, as you said, 350, 400 within the next 5 years. Sure.
Yeah.
Within the next 10, maybe you're looking at 400 or 500, which is still going to be a huge gain. You're still
Excellent.
tripling your
Yeah.
money over 10 years. So, and it's very strategic by Google, I think, or Alphabet. Sorry, I think they know what they're doing. They noticed that the two most valuable companies in the world are the companies that stock split repeatedly, Microsoft and Apple, and they kept their share prices very, very low. But if you look at Microsoft's earnings and revenue compared to Google's, it's way lower. So I think Google understands that if they cut this, and again, like Apple did a 5-for-1 stock split, it's nothing big. Google's doing a 20-for-1. Like that's crazy. Like they're really going after it. I think they understand that they're going to get a lot of buyers, and I really think they're going to have a push towards most valuable company. So it's a very strategic 20-for-1. I've never seen that.
Yeah.
So they're really.
I was in the Apple stock split, and that was, I think it was like $400 a share or something. It might have got to $500.
500 to 100.
Yeah. And then when it split, I think I got like 90 something dollars a share. So, and now it's up 70 something % since that split.
Yeah.
So that was about 2 years ago, I think. So maybe a year and a half.
Mark's over here mentioning apes and Reddit. No, we're not going to tell them. They can play with their game stock.
I'm definitely not telling any of those guys on Wall Street Bets about Google. Hell no. I want them to figure out really, really late.
They don't care about Google.
5 years from now, and then that way they bid up my Google shares 5 years from now. I hope
Wall
they're really
Street
late.
Bets is not interested in companies that make money.
No,
not
they're
interested.
looking for small, stupid, silly
Yeah.
things. Dorothy over here, this may also put them on the NASDAQ. I thought they were already on there.
Google already is on the NASDAQ.
Google's already like top holding on NASDAQ.
Yeah. And then we got, I believe it's probably Mark.
Yeah. I think they will.
No, Alicia.
I think this is
wishing
going to
that
trigger an
Amazon
Amazon split.
I
Possibly,
agree.
yeah.
I think Google doing it is going to trigger Amazon to do it as well.
Yeah. And then that's even better because that's more money in us for us to buy in and get even more money in over the next 5 to 10 years. That's predictions there, ladies and gentlemen. All right. So we're going to open it up for the next minute. Let any stocks you want in the comments so that we can do a live breakdown of it for you guys. So go ahead. Whatever stock you want us to break down live, put it in the comments right now to let us know. Someone's saying Google splitting is trying to get into the Dow.
I don't think they really care about that at all. I don't even think they don't care about what index they're in at all.
And Google and the Dow would be a very insignificant thing for the Dow because it's price weighted. So Google 150 per share, it would be the least significant, the least biggest driver of the Dow. It's kind of silly the way the Dow is structured.
All right, we're getting some stocks here. We got chip stocks with Mark. We got Coinbase, Nvidia, Bros, Ford, Nvidia. We've already done an episode on Nvidia.
Yeah, Nvidia we've already covered. That's a good stock.
Yeah, Upstart.
Bros is one I don't think we've talked about before. That's that coffee shop, right? That everyone's
I believe
talking
so.
about.
Yeah.
Let's talk about Bros.
All right.
Dutch
Dutch
Bros.
Bros. Yes, it's the Dutch Bros trading right now after market
Trying
at
to
55.
steal my podcast name.
I said Dutch Bros, not Stock Bros. Here we go.
That's
here
where
we
they
go.
got it from.
There, yeah, that must be it. So we're going to be talking about Bros because we haven't talked about that. We got also Ford. Maybe later another date we can
Ford,
do that. I think we already talked about Ford.
We covered a lot of these: AMD, Ford, Nvidia.
All right, let's see. This is the 1 year, not even 1 year. They haven't been around 1 year, so 6 months. Whoa, 6 months maybe. Can we do 6 months?
Fresh IPO. Fresh
IPO at 55. It's trading at 55. At its peak in November, it was at $76.
Dropped below 40 not too long ago.
No, yeah, it was lowest it's been at is at 41.31. It looks like
they have had some profitable quarters. Looking through their earnings, but the bad news is they're trending down The bad news is they're trending down every single quarter since they IPO'd. So that isn't good. And their profit margin is currently negative 5%. So
I love this, Mark. Yes.
Oh, if Jim Cramer's talking about it, it's
garbage.
Oh man, a lot of people like it in the group. When they IPO'd, I looked at their financials. I looked at the prospectus, and they had a 2% profit margin. Yeah, this is the type of company to make like $250 million in a year and come out of it with like $1 million profit. Like, you're screwed. So they don't have restaurants are very, very flaky.
Most of them barely last 5 years.
Yeah, unless you're really doing something right. And the issue I have with Dutch Bros is they're regional. They only exist in the Pacific Northwest. They're Oregon based. So I think if you travel one state outside of Oregon, like a border state, you might find Dutch Bros. After that, you're not going to see them anywhere else in the United States, let alone the world. So their whole thing with IPOing is they want to expand. Funny thing is, before McDonald's IPO'd, they were in multiple states all across the United States.
Yeah.
Really, really funny. But Dutch Bros apparently cannot expand unless they get IPO money. So the issue with this is that they're already running thin margins. So when they expand, now losses are going to balloon huge. And 2022 is the wrong time to really expand. Because the consumer is indebted and interest rates are rising. So
taking out loans that
any loans that they have are going to get more expensive. That's going to cut into your expansion.
Do you think it's just sentimental? I think it's just people that are talking about this or people that go there for coffee and whatnot. And sometimes we just get sentimental with where we're shopping. Like I'll admit it, I like Apple, So, but it's just one of those things. They, like you said, they made $129 million in Q4 in revenue, which is nothing, and they lost $6.74 million in net revenue.
And they're trading at over $2 billion.
God, this is ridiculous. The stock market's and Facebook's down 20%.
But Facebook is down 20%.
Yeah. Facebook's down 20%, and this one's down 3.5% today. But
exactly that. Whoever made that comment, Kramer keeps talking about it. They're out west, but they're not going to take over Dunkin'. Exactly. Dunkin' used to be publicly traded, but as I always say, the best companies are private. And what happened is somebody really liked Dunkin' and they took it private because Dunkin' doesn't need to be public. They don't need the public exposure. They don't need the money. They don't need those capital markets. They're fine being private. Like, they're that profitable. So I always say this all the time. They're not even going to be better than Dunkin' Donuts, let alone Starbucks. And Starbucks prowess comes from not only the fact that they're in every U.S. state, but that they're in China. getting US companies into China, I don't know if you know this, but it's really tough. Like guys like Starbucks and McDonald's that have actually set up shop in China, that tells you just how strong those businesses are, because China doesn't like US businesses on their streets. They really don't.
Well, and here's the final comparison. Starbucks Q4, their net income $1.8 billion.
Jesus.
Dutch Bros negative $6 million. So that just tells you how huge Starbucks is compared to. I guess people want to get in on IPOs early, and I get it, but I don't know. It's like, why we all only have so much money, so why not put your money into the best possible things you can put it in?
Yeah,
exactly. And I wouldn't even want to be in coffee
Starbucks.
or juice drinks, but if I did, it would be Starbucks, right?
Yeah, I don't even want Starbucks, but at least if you're in Starbucks, I can understand it.
Exactly.
You know,
my point exactly.
Yeah.
All right, guys, we're coming up to the end here. We're going to start to say our goodbyes, and thank you guys for listening. So, Dalt, where can they find you to get your amazing wisdom?
As always, man, you can check me out on my blog, bandoncourtcapital.com/blog. The article that I'm writing in a couple hours tonight, it's going to be a late one. I had a late day here with shopping and doing all other sorts of stuff business-wise, but it's going to be a late one. But it's going to later on, but it'll be about Facebook. So everything that I covered on my Post-it notes, I had 3 Post-it notes here for the show. It's going to be all in an article. So in case you missed this, if you're not a visual or a visual person or a hearing person, I'm going to write it all down for you, what happened with the earnings report. And on Instagram as well, at RismayLife, RismayLife. Lots of free content on there, especially Wall Street Journal stuff. So please tune in.
All right. And Tony, of course, where can we find you and listen to your wisdom?
Excellent show. Glad to be back. Stock Bros podcast. And also check out my course on Udemy. I'll put the link in below for all you new investors and new people to the group. You can learn about investing, and you start out at the very basics if you know nothing, and you build a foundation.
I have to say,
yeah.
And guys, if you enjoyed this show, this is what I need you guys to do. If you want to support us, if you don't want to get us merchandise, because I didn't see anybody talking about merchandise, I will make a t-shirt. I will mock it up and show you guys so that you know what you're getting. But if you guys want to help us out, there are links in the show notes linking to the Spotify and the Apple. Go give us a rating and review. Help us get up in the charts. That's all you have to do. Just go over, listen, leave a 5-star review. It'd be so helpful for us. And if you go over to Instagram, Stock Dirty Pod, make sure you like us there so that more people can learn about the amazing group and become financially smarter when it comes to investing. I'm, of course, Phil Better, the podcast mogul. These 2 guys are the geniuses, Tony and Dalt. They help you understand the stock market and are amazing admins. I thank you all for listening.
Hold on, wait. One thing. Somebody asked, is it a good time to get in Facebook tomorrow?
Yes. No. Wait, we said no.
I will be buying at least another 10% worth of the position I have right now. I'll be buying tomorrow. Tony will be buying tomorroll. And
100%.
Yeah.
100%. I will definitely post in the group when I do buy.
As well.
Unless, like I said, unless the stock pops again. And then I'm like, I'm just waiting for a good opportunity to put a chunk of money into something. So this was it. This is it. Like, this is the opportunity. So we'll see.
Right. And with that, ladies and gentlemen, remember, be a smart investor and stock dirty to me.
Peace.